Good morning, guys.
The toss was too low and too in front.
Wants to be another break point here for Svitolina.
Savita Subramanian. Savita Subraman.
Well, this is a tremendous tussle now. 5 games all.
It's so tough for Mertens. She just played, I felt like a great, perfect game. Did nothing wrong. Just
Good morning, guys. Welcome back to our Stocks to Watch video for the week of Monday, February 8th. I've gotten a little bit better at these videos, so I'm recording this on the Friday before Monday, February 8th. So we have our stocks ready to go, and we know what I'm looking at right now as the week ends and what the week will start with. I'm also going to combine this with our best energy stocks of 2021 to watch for because these topics really overlap. A lot of the new president of the USA, the Biden administration's policies are helping energy stocks, and I want you guys to really get on board early because when the stimulus hits, it's going to really hit these areas, and it's already starting to hit these areas because the excitement is in the air. All right, so let's look at what stocks to watch. And to preface this, I'm going to start with an article by my fellow Indian, although an Indian who's much more accomplished than I'll probably ever be, named Savita Subramanian from Bank of America. She's a widely followed strategist, and I'd like to point out, there she is right there. I'd like to point out what she said in this article, which I get on my stocks app, which you should all have on your iPhones or Androids, which is that the Biden administration stock market won't be like the Trump stock market. What does she mean there? Well, scrolling down, I'm going to synthesize this article for you real quick. And she writes that although there are some sell signals in the market right now, what investors should do is look at financials, energy, industrials, and healthcare. And that means that her firm and their money is overweight. They have larger amounts of money and larger predictions on these four sectors: financials, energy, industrials, and healthcare. Now, they find other things like pent-up demand for manufacturing. It's going to happen as more people start shopping and actually getting out and buying things like cars. But the most important thing is that those four sectors could stand to grow a lot more, especially more than the traditional growth stocks. Why is that? Well, we all know that Biden is... Well, we all know that President Biden is looking at increasing taxes, and that's going to hurt growth stocks. Typically, those stocks are tech stocks like Amazon, Apple, Facebook, Netflix, the FANG. They hurt growth stocks because when there's more taxes, there's less incentive to grow. For example, with the Trump administration, they reduced the corporate tax rate all the way down to 21%, which inspired companies like Apple to bring a ton of money back into the US, back into the market, and work on growth, growing their iPhone technologies, their automobile technologies, their computers. And even though we do have low interest rates now, which inspires growth, when you have low interest rates and high taxes and a tax increase, it's going to inspire companies that are growth stocks to do less growth because they're going to make less return on their dollar for that growth. It's going to inspire them more just to work on what they have, to lock things down, and just to kind of, plan for the future. And that means that we might not want to have all of our money in their stocks if they're going to be growing less. So this whole premise of what investors... So this whole idea of what should investors do is based on expanding your portfolio into financials, energy, industrials, and healthcare. And I want to focus on energy. Okay, now that we've covered a little bit of the reasoning there, thanks by the way to our author here. Okay, so now we've covered a little bit of background there. Thanks, by the way, to our author, Savita there. Thanks for that resource. I want to focus on which energy stocks I'm looking at, and some of them I've already talked about before, all right? So the first one is DNMR, which is actually an environment play and an energy play. Scrolling down to the bottom of my stocks app here, we can see the list that I generally make for my friends and send them out. I usually just screenshot what's going on at the bottom here. What's going on at the bottom of my watch list here, because I can only fit like 1, 2, 3, 4, 5, 6, 7 stocks in there. That's all people really need. And we're going to open up DNMR. Fantastic play here on plastic reusable waste and helping turn the environment into just a more eco-friendly place, and also using those wastes for further energy resources. DNMR is up a whopping 16.86% today on a Friday. Fridays are traditionally bad in today's stock market because people make so much money on Monday and Tuesday and Wednesday that they want to sell by Friday. But this is just incredible. So if you see a stock like DNMR that you want to get into as an energy environment play, what you really need to do is wait for it to have a drop day, because with these ups, as we all know, it will go down 7, 8, even 10% one day, and hop on in, because I see this stock going to at least $100 early in this year. Okay, so the next energy stock I want us to look at is called Star Peak Energy Transition Corporation. Fortunately, they are down today, so they stand to gain a little bit. I found out about this one watching, like any other Joe Blow, the Fast Money show on CNBC. This company is undervalued, which means the market is making a mistake about it, and it should be worth about $70 for we look at its chart, we can see that it's come a long way. But don't be disappointed and don't be shy. Don't be sad that you didn't get it at around, $9 or $10, because back then we had no idea what was going to happen. What's important now is that you can get this stock at a low, around say $24, and hop on in. Whenever you want to find out what a company actually does, which is important because we should know what we're actually investing in, it's not just a name or a stock ticker. I like just Googling a simple search for Motley Fool and then the ticker here. So what we could do, I'll come back to the article in a second, is look up STPK, Motley Fool, and we'll see generally right away without even clicking their recommendations, and then you can see like some information about the company as well. So we can open it up. Fool does a great job of explaining companies on a non-biased perspective. They will hate on companies that are doing the wrong things and love the ones that are doing good things. They also have this little play at the end where you should buy 10 stocks, which I've done. You can do it if you have like a couple $100s to spare and really get their watch list, but they tell you enough for free as well. But you might find that you're able to glean enough information for free from Fool.com as well. So we can look at this So with a couple easy clicks, we can see that StarPeak Energy Transition is a special acquisition company, an SPAC. They're making a splash in the clean energy space. And they're using AI to improve performance of clean energy storage and improve distribution efficiency. If that doesn't scream 2021 and where the money's going, then I don't know what does. So I made a move to get into STPK, and lo and behold, that was on a Friday. I believe it was last Friday, a week ago today. And come Monday, it was up about 10%. So there we go. A little bit of research goes a long way with a good energy stock pick for 2021. Lastly, guys, the energy stock I want you to look at is called DMTK. And I got that also from Fool.com. They said, got $2,000 here, top 3 growth stocks to buy in February. I know you might be like, ooh, spam, because $2,000? Why do they want me to throw that into some stocks I don't even know about? But really, sometimes these authors do have our best interests in mind. Not always, so you do have to read, but more and more these days they have been. So I looked into this, and it talked about stocks that have a lot of room to grow. The first one was DermTech, DMTK. So what they say is they're focusing on surgical skin biopsies. Only around 180,000 cases of melanoma are found from these biopsies. There's been some failure in the skin inspections. However, there's been some failure in the skin inspections. However, DMTK addresses these problems. Their operations are 25% less expensive than surgical. And going down, we can see DermTech should have a massive growth runway ahead of it. That's a great line right there. No reason not to jump in and see where DermTech will take you, especially if you're putting money into companies that grow slower. You should just give it a shot and put some money into companies that are going to grow quicker. Again, look for a down day. Don't necessarily buy at the highs. But reviews like these early in the year generally are going to pan out, I've found, with my own investments and my own dollars spent. You could also learn about Fiverr and Social Capital in this one. However, I've watched those for the past couple days, and DMTK definitely did the best, put it that way. Alright guys, so that covers our best energy stocks to watch right now in 2021. Alright guys, so that covers our best energy stocks 2021, as well as stocks to watch week of February 8th. They are DNMR, STPK, and DMTK. Those 4-letter, sort of unrelated letter combinations are going to be working, I think. And like I said, from the logic we read about early in the video, it's going to be harder for growth companies to really outperform this year. I know that doesn't mean you should shift away from growth stocks like Apple. You should always really own them, I think. but just broaden your portfolio so that you're able to take advantage of some of this rapid growth that comes from the new president's administration, their stimulus, and they're often elusive, hard to understand, but hopefully helpful for our world and our economy's goals. So happy investing. Please let me know in the comments below which energy stocks 2021 you're looking at. I know we missed a bunch. Like I've said before, I like doing lists of 3 or 4 stocks instead of 10 because with a 10 stock list, I'm going to have to include some I'm just not sure about just to get to 10. And if someone picks one of those and puts all their money in, they could miss out on the really good ones like I've shown in our top 3 energy stocks list right here. So hope you enjoyed it, guys. If you want to get some free cash from Webull, sign up to Webull via the link below in the description. They will send you up to 4 free stocks valued at insanely large amounts. You could just get a Netflix stock for free or an Apple stock for free. And you can do that just by depositing $100 onto their app. So it really is free money, and I want everyone to take advantage because times are tough and cash is going to be, debatably less valuable in the future. So you should use it now, get it now rather, and use it to build your future. Alright guys, so I'm Gray Ryan. Thanks so much for watching. You guys mean a lot to me. Thanks for getting in on our relatively new stock investing videos. Alright, bye for now. See you next time.